All right, let's give you the markets update and slightly changing things this morning because we want to take you to that briefing by the eThekwini Mayor. So let's get straight into it. The local bourse will be contending with struggling Asian markets in early trade as attention continues to focus on the war in Ukraine. Markets also considering news that Europe is looking to phase out imports of Russia, or should I say Russian coal, with details under discussion, which could see similar moves for oil and gas. Jimmy Moyaha is independent analyst, joining us now to dissect some of the latest developments in the markets. Jimmy, good morning to you. The rand weaker at 14 rand 69 against the dollar. This is in early trade, having slipped 0.6% on Tuesday. Talk us through these developments.
The rand actually slipped to as low as 14.75 at one stage, bounced off a key level of 14 rand 50. It's been struggling to break and sustain below that 14 rand 50 level in recent times. And since then, we're sort of seeing it, as I said, touch 14.75, sit at about 14.68 at the moment. And the overall market position at the moment from local markets and other international markets, of course, is the concern around, as you rightly mentioned, the tensions in the Ukraine, especially off the back of the recent announcement of possible new sanctions that are being pushed forward by the French president at the moment.
Yeah, let's talk commodities. Oil prices mixed at the start of trade as new Russian sanctions raise supply concerns. Make sense of these developments for us.
So as I mentioned, France has come out to say that a new batch of sanctions need to be imposed on Russia, and they'll be looking to Germany to support them for this. So the EU and possibly the US will be looking to do a fresh round of sanctions given the Ukraine situation and the amount of civilians that have been casualties as a result of Russia's invasion. What's interesting to note on the oil side of things is France has outlined that they're looking to target oil and coal supply from Russia, but Russia in turn has been offering significant discounts on its oil to other countries, and India has actually taken up about 1 million barrels of oil as a result of those discounts, and we're seeing that there's a possibility that China might look to do the same in taking up some of the Russian oil to replenish their reserves that they strategically released to their local refineries. We're seeing countries like South Korea and Japan also looking to do what's known as oil crude swaps. So they're looking to swap about 650,000 barrels per day, swapping out Russian oil for similar types of oil and similar grades of oil, mainly coming out of the Middle East. So the oil situation overall is a fairly fluid situation, given that Russia is looking to offload their supply at a discount. On the one side as well, we've also got the nuclear talks with Iran being suspended in Vienna in Austria, and that's not a very good thing for oil at the moment because Iran could potentially fill the gap that is being left by Russia in the oil market if these sanctions continue and if the tensions continue in the Ukraine. However, the OPEC countries and the Middle East have outright said that there isn't a supply problem at the moment. They don't have a supply shortage, and they're able to meet the supply requirements at the moment. And we know that the International Energy Agency is also looking to release some more strategic reserves to see if they can keep the oil price in check. So a lot of moving factors on the oil side, and everything's still a very dynamic and fluid situation.
Let's quickly talk company news. MTN shares had their worst day in more than a year yesterday. This is on the back of the new SIM registration rules in Nigeria. What's going on here? And perhaps even more importantly, how's their share price doing?
So initially there was a sharp reaction to the Nigerian Communications Commission's restrictions that are being imposed. The decision was taken by the NCC to basically impose restrictions on all outgoing calls from numbers that are not registered on the National Identifier Number System. And initially, given that MTN has such a large presence in Nigeria, this was thought that it would affect them quite adversely. And I think that's why we saw the share price take such a dive yesterday. It was about 7.8% down yesterday. But MTN has come out to say that they've got about 47 million subscribers that have submitted their NINs as of 31st of March, and that's about 67% of their total subscriber base within Nigeria. They're saying that these restrictions that are being imposed at the moment, if you look at their 2021 financials, will only affect about 9% of their 2021 Nigerian revenue and only about 3% of their overall group revenue. And I think off the back of that statement released by MTN, we've seen the share price rebound quite a bit. The share price is trading up about 4.4% for the day. So it looks as though those fears have been quelled by MTN to just say that, yes, we are compliant and we will continue to be compliant, and the percentage of our clients that are currently non-compliant is not a significant revenue number and is not a significant number of our client base, but they have expressly stated that they will continue to work with the NCC to make sure that the rest of their clients are compliant.
Yeah, let's conclude the conversation, Jimmy, with Caxton and CTP, publishers and printers, announcing plans to buy Amcor Flexibles South Africa for an amount of 90 million rand cash. Why is this transaction important to talk about?
So Caxton's been looking to diversify some of its businesses. I mean, they've got a CTP business that specializes in the packaging side of things, and they've basically outlined that their acquisition of Amcor is a strategic acquisition from their perspective, in that there's a lot of synergies between the two businesses. They supply some of Amcor's existing clients with raw materials. The structure of the business in terms of what Amcor does from a renewable packaging perspective in line with the wine industry lines up with what CTP, one of Caxton's businesses, does on their side with their wine clients as well. So it just looks like a very good strategic acquisition and a very good synergy of resources that Caxton says that they want to benefit off of and leverage off of. The reasons why Amcor are selling are still unclear at the moment. Amcor's only come out to say that they think that the business is better in the hands of a South African or in the hands of a local manufacturer. And I mean, there was, of course, rumors that this is off the back of the July unrest that we saw last year, because Amcor actually has one of their plants out in Durban that was affected by the civil unrest in July of last year. So that's one of the factors that are being said to be part of the sale. However, Amcor has not confirmed that. They're, of course, listed in the US, and Caxton's listed locally. So for Caxton, this is a very good strategic acquisition that they're seeing. It allows them to leverage off of a lot of things, like the fact that their plants in the Western Cape and Cape Town are adjacent to one another. So it just allows them to streamline some of their processes. And Caxton has, of course, assured investors that no jobs will be lost as a result of this acquisition, that there will be no retrenchments on the Amcor side, which is a very good thing to hear. So for now, it looks as though Caxton's going to come out winning with this transaction. They're just waiting for the regulatory approvals from the Competition Commission, of course.
Jimmy Moyaha is independent markets analyst. Thank you very much for that markets update. Let's